Hello and welcome, everyone. Thanks so much for being here. And we're really excited to get going today. As you know, we are discussing some very exciting Opportunity Zone investments in Massachusetts. And this session is really targeted for accredited investors and folks who are really looking to understand the greater marketplace of Opportunity Zone investment. We are going to talk about a specific deal today, the Alden. We have a couple of unbelievable guests who are joining us today, developers, very experienced from out in the greater Boston metro area. We're going to bring those folks up on stage. We have Jeff Schlossberg joining us today, has a really terrific background and experience, and also Mr. Ted Carman, both of whom are joining us from Concord Square Development. And we're going to learn a little bit more about some work that they've been doing on some specific projects, and also how those projects are penciling and coming together, and why it is that this idea of Opportunity Zone development and investment makes so much sense in and around even major metros, and how does that come together, and how does this all work? But most importantly, I wanted to thank everyone for being with us today. We are OZ Listings, the national marketplace for Opportunity Zone deals and businesses looking to introduce themselves to the greater marketplace of investors. And so we appreciate you being here today. We're also syndicating this. And so whether you're watching it with us live today on Tuesday or joining us later, we welcome you. And we are so glad that you're learning a little bit more about these exciting projects. And so first and foremost, Jeff and Ted, really excited that you guys are able to join us today. And, one of the great ways for us to perhaps get started, I think would be, and I always like to just kind of jump into this, maybe we could learn a little bit more about you guys and about what is it that you do, who are you, and maybe just a little bit on Concord Square to start off with. I think that's always helpful, just very briefly on your background so that everyone can be introduced to you lovely gentlemen. And I've had the great opportunity to get to know you. So I'll pass the mic here.
Oh, sure. I'm Ted Carman, president of Concord Square Planning and Development. Jeff is my partner, vice president. We've been working together since 2017 in Brockton. I've got decades of experience in housing that goes back many years. We've been working in Brockton since 2017. We've developed two projects there, one with 55 apartments and one with 18 apartments. They're both market rate projects. They're fully occupied. We have a management company. We're managing them. Jeff and I are deeply engaged in the rental market in Brockton, and also have a very strong relationship with the mayor, the planning board, et cetera, in Brockton.
Always a wise choice. And Jeff?
Yeah, echoing everything Ted just mentioned, both of those projects were Opportunity Zone projects, so we're also experienced in this space. Looking forward to getting another one off the ground with the Alden.
I love that. And so, I mean, we're going to dive right in today. And for anyone who's joined us before, sometimes we do a little bit more of a case study. Sometimes this is more of an interview. Today, we're really going to dive into this specific project for all sorts of reasons. Partially, these gentlemen are one of our featured projects on OZ Listings. But beyond that, as I've gotten to know you, understand the projects, and I'll try and do very high level here, and then perhaps we could jump in. The Alden presents as 100 new apartments, studios, 1 bedroom, 2 bedroom, nice mix. This is a new construction project, 100% market rate. You've got 125 on-grade parking spots. You've got 20 miles south of Boston and an Opportunity Zone project. So it kind of is a straight up the middle type of a project, I feel like. But why Brockton, Massachusetts? Like, what made that location for you guys so powerful? And why should Opportunity Zone investors in particular pay attention to something like this?
Well, Jeff, as you said, it's only 20 miles from Boston. So it's deep within the greater Boston regional housing market, which is one of the absolute strongest markets in the entire country. And so that makes it very attractive. Our site is also a 5-minute walk from the commuter rail line into Boston with regular trains. Takes 40 minutes. The trains dump you at South Station, which is right next to the seaport area, which is probably the biotech center of the entire world. And also it's next to the downtown Boston financial district. And South Station is a stop on the red line, which can take you directly to multiple stops in Cambridge, Kendall Square, Harvard Square, etc., and to Somerville. So it's got this terrific set of assets in terms of a location. In the city, it's just north of the CBD, the Central Business District. It's really part of that. There's easy access from the site to the major highways, Route 24 that goes north-south, Route 495, which is the ring road to the south, and Route 128, ring road to around Boston to the north of us, and then Route 93 that goes all the way up to Maine. So from a location point of view, it's really first rate.
Yeah, that's outstanding. And I had picked up on that in our last conversation, but I'm curious for folks who don't maybe know Brockton as well, or even the greater Boston metro, economically, demographically, let's say development wise, what is happening in Brockton right now that creates the window for a project like this one?
Yeah, so Brockton is a city in its own right of 100,000 people. It's sort of the core of the Metro South region of Boston. And Ted just mentioned all the connectivity it has to, the downtown Boston CBD. But Brockton itself was an industrial town, shoe manufacturing hub. A lot of that industry has obviously left, going back to the 70s and the 80s. And so the city now, since about the early 2010s, like 2012, has been fully engaged in a revitalization effort. So the mayor, the city council, the ZBA, all the various government entities locally and business leaders have been engaged in a full-on revitalization effort with their goal to promote housing downtown. And to date, we've seen 500 units of housing come online in the downtown. Of course, as Ted mentioned, the Anglem, our 55-unit project, and Petronelli, our 18-year project, are part of that revitalization momentum. So we're really in the middle of that. And as more housing units come online, that's the critical mass that the planners and everybody think is necessary to promote commercial businesses and amenities that everyone wants to see in a vibrant downtown. So from our perspective, doubling down on Brockton, the Alden 100 units, we think we're going to be hitting the revitalization swing at a good place, and that after the 10-year hold, we're really going to see a lot of value accumulate in Brockton, and it's going to make for a good economic outcome for the project.
Brilliant. Well, and it sounds like you guys identified that early on. It's why you represent almost 20% of what's happened in that space, which is exciting, frankly. And I'm curious, for someone who might be hearing this for the first time, what exactly are you building here? Let's talk about it. And what's the big mission behind this project? Ted, maybe?
Sure. We're building 100 units. They're all market rate, which is a plus in our mind because the inclusionary zoning that much of Boston and other communities require really puts a limit on profitability. And it's going to be a 5-story building that's all new construction, which means that the risk is a whole lot less than trying to renovate an existing building. We think it's going to be well positioned to offer housing to people who are working in Boston but don't want to pay Boston rents. They're going to be high quality units. They're going to stand out in the community because much of the community is older housing stock. And our number one mission is dealing with this, addressing the shortage of housing in the whole region, and then B, we think we're well positioned to deliver really excellent financial results to our investors and partners.
Well, I love that, which really hits on several of the big topics on why opportunity zones are so popular, especially with let's call it the financially intelligent, and also to achieve the core mission, which is creating affordable housing, satisfying a housing stock issue that might show up. And so, maybe paint the finished picture here then, Jeff. When this project is complete, what exists that doesn't exist today, let's say?
Yeah, so Ted picked up on some good points about the housing stock. It's so difficult to build housing in the Boston region, especially at a scale of 100 plus unit projects. So, that's a real opportunity we see here. Just to paint a picture of the rents, again, a mix of studios, 1s and 2s. The studios will be listing at, $2,100. One bedroom's at $2,300 and two bedrooms at $2,900 a month, which again, compared to Boston is say half. And so this is really providing what we would call workforce housing to people. So it's a lot of nurses, a lot of medical staff, teachers, firefighters. So that's the real, mission behind the housing product that we're providing at the price point. But that doesn't mean it's going to be anything second rate. It's really going to be a high quality building. Again, we've got on-site parking for everybody that's safe and secure. You're also the 5-minute walk to the train. But it's also an amenity rich building. It's going to have a gym, tenant lounge, outdoor patio area, top of the line package delivery systems, storage units available, bike storage units available. So it's really amenity rich building. And then it's also designed to meet Energy Star certification. So it's an all electric building. We're really right up on the leading edge of sort of advancements in building technology. So it's really going to be a top of the line product for both our renters and our investors long term.
Well, that's exciting. As I'm looking through kind of some of our attendees today, I see some very high-end investors. So let's go a little bit deeper because I think it seems like this crowd can handle it. So where are we today in the life cycle? What are the next big milestones between here and delivery?
So the project is really what we would describe as shovel ready. We've already gone through the process of zoning approval. We have our 100% market rate approval. We've taken the project through site plan approval. The architecture and engineering plans are complete. The city building department has reviewed those plans and they're ready to issue a building permit. We've got a primary construction and permanent loan from North Shore Bank lined up. And our contractor, Aberthock Construction, is out on the market in the process of buying out the job. So we've really taken this project all the way through the development cycle, and we're ready to hit construction in the near future.
Well, that's exciting. And hopefully that happens in the nearer future than
Yes.
before today. Yeah. So, Ted, I think as people kind of get to know a project, they have to also get to know the area, right? You need to know the developer. You need to underwrite the developer themselves, I feel like, and you guys are terrific, which is great. And also to understand what the local need is. And I'm curious, as you look at this project, what's the core problem that this project solves that most people maybe would underestimate if they really get to know the local need?
Well, Jeff, I've been deeply involved in some policy areas over the last 25 years, including working on legislation that got passed that's improved zoning options. And I've spent a lot of time thinking about the big picture macro situation. And the big picture macro situation in Greater Boston is that we have one of the strongest housing markets in the country because, number one, we've got a series of universities, technology companies, hospitals, the financial sector, all of which makes for a very robust job creation situation. And we have, economists have a name for it. We have one of the highest job creation potentials in the country. But the problem is our housing supply is severely restricted by regulations, by NIMBYism, and by all of the problems that you get in an area like Boston. And what that means is that there's always pressure to pay more wages and higher wages, and those people come into the marketplace and push prices up. And at the same time, despite the fact that everybody in Greater Boston understands, the leadership understands what the problem is, there is not anything on the horizon that's going to generate enough housing units to begin to meet the demand that's available. And the demand is going to keep going because of the vibrancy of all our institutions in the state. So this is in the context of, as Jeff said, Brockton was the shoe capital of the world from 1880 till 1930, and then those businesses went away. It led to something of a hollowing out of downtown, and the city was had a tough situation 20 years ago. That's why the redevelopment push went on. And the redevelopment push has been so successful that over the last 10 years, rents have gone up 6.7% per year. That's almost doubling in 10 years. So we're getting the rents that we just outlined are rents that we are currently actually getting in our properties downtown. We have made up a lot of the difference between the rents in downtown Boston, the rents in Quincy, which is a community just north of us, between us and Boston. But what we see going forward is an opportunity to continue to reduce that delta, the delta between our rents and the rents in Quincy and Boston. And that means that that means this is, in our mind, one of the best possible places to put your money, because we're buying in at today's costs, but our rents are going to go up on two levels. Level one is going to be as the regional rents go up in Boston in general, which everybody understands. But level two, but our second push is we're going to get closer to the Boston rents and the Quincy rents as the urban revitalization programs become more successful. So we see this as a better opportunity than a suburban opportunity in Boston, because first of all, our costs are reasonable. We don't have to pay prevailing wages for construction. And we're going to get this double push on rents. And 10 years from now, that means our NOI will be substantially higher. When it's time to sell, we'll be selling from a strong NOI, which means very good profits for our investors.
That's fantastic. Well, and speaking of this as an investment opportunity, let's maybe take a deeper dive, and whichever of you gentlemen would like to handle this, let's take a look, maybe walk us through the capital stack. How are things structured today, and why maybe also did you engineer it that way?
Yeah, so the capital stack for this project is pretty simple and straightforward. To start, it's a $25 million construction loan, again from North Shore Bank. Then it's about $22.5 million of OZ equity, and we've received an allocation from the state of a state housing tax credit called HDIP that'll provide another $2.5 million to the capital stack. And that tax credit is pretty simple to monetize. It doesn't come with any structuring concerns. So that's pretty straightforward for a $50 million project. It's those three elements, and we're coming at that the project that way because it's a new construction deal. It's pretty straightforward. We have a background in historic tax credit projects that come with a lot of complication. We've gone through that on our previous two projects. And we view from an OZ investment perspective, straightforward. The OZ investors are placed first, in this structure. And long term, I think it'll make it simple for those investors to benefit from the project.
I think that's great. And maybe just a little bit more of a curveball question then. So what do you see as the biggest risks in executing a project like this? What have you built in to reduce those risks for people who are considering participating in this project?
Yeah, so to start with development projects, one of the major risks is everything up front. It's permitting, it's paying all the consultants to make sure the site is okay for development from an environmental and geotechnical standpoint. And so we've already done all that work. So we've de-risked the project from an upfront standpoint. And so what we're left with is execution, construction risk. There's also a risk about the rental market shifting as we do construction for 1.5 years, 2 years. So to take on the construction risk, we have a great working relationship with our contractor and our architect. We've completed projects with both of them before. The contractor is Aberthal Construction, who've been around for a long time. The architect is The Architectural Team. They go by TAT. They're a very well-known firm on the East Coast. So we have a lot of faith in their work and their ability, and the plans and specs are in a good shape going into construction. On the rental market shift, things can happen, resulting in potentially softer rents when we go out to market or longer than expected lease-up times. But both the construction risk and the lease-up risk, we have contingencies built in the project to handle that. And so we've got 20% of the budget is set aside for contingency, and that's partially that's us deferring fees, that's hard cost contingency, that's soft cost contingency, it's project reserves. So we think that's an ample amount of resources to handle anything we encounter during the construction and lease up process. There's an added level of interest rate risk, just general market risk as the 10-year hold goes on. our business plan is to refinance at some point. And so we'll just monitor the interest rate environment. No one can control that, obviously. And when it's favorable to the projects and the investors, we'll report that out and pursue a refinancing. And same with the sale at the end of the project. Once we get to the 10-year hold, monitor, communicate, and see what the best exit is for everybody.
That's terrific. It's interesting because from an investor standpoint, I look at something like this and automatically I'm starting to crunch numbers. I'm interested, what do you think drives the core returns here? And what is, for you guys specifically, what does success look like in real numbers on this project?
Well, the returns are definitely driven by building the project for our budget and within the contingency amounts. And then B, the returns are driven by the rents going up. So we see rents going up over the 10-year period. We've as I noted, rents in Brockton, generally in Brockton over the last 10 years, have gone up at 6.7% per year. So in our projections, we have projected much more conservatively than that at 4.5% per year. We anticipate that operating costs will not go up at that speed. So our NOI is going to go up. We expect that over time, as the area gets better, there might be some reduction in the cap rate so that when we exit, there will be extra dollars available. And that's really how we see this moving. This is really a play on the shortfall of housing in Western Massachusetts, in the region, the fact that that's going to push rents up, and that we're going to hold this, and 10 years from now, when at the exit time, we'll be in a good place to come out with a good deal of profit. We see we're projecting an internal rate of return for investors in the 15 to 16% range.
No, it's a great target. I love that. I'm curious, we mentioned before the kind of heart and intent of the Opportunity Zone program in general and the impact that it can have. I believe impact investing is really an important part of this market, frankly, in the marketplace. And I'm curious from that perspective, on the impact investing side of things, what measurable outcomes does this project create? I mean, do you see housing or jobs, local economic lift? And how do you think about that impact maybe as part of the overall value?
Brockton is what Massachusetts calls a gateway city. And gateway cities are cities that are over 35,000 in population and have a higher unemployment rate and lower average wages and lower educational attainment. And so Brockton fits that category. That makes it eligible for additional programs that the state has, which all are tied into this revitalization program in downtown. And so investing here is investing consistently with that whole approach. And it will have an impact on a community that is below average in some of those areas. Now, as I indicated, that gives us an opportunity to have even higher returns than might be the case in other areas. In addition, we're going to be providing $14 to $16 million of wages to a lot of local people, and over half of them, in our experience to date, will be minorities. And so that's certainly part of impact investing. And the overall project will be eligible for CRA credits for banks and so forth, which is another way to measure the impact it would have. So we think this is a case to do good for the community, to do good for the region, to deal with the housing supply, to provide marvelous housing for 100 families, and at the same time, make a return that's probably higher than you could find at other locations.
I love that. It resonates with the, if we do good, we'll do well. And I think that that's an important part of the program. What's interesting is it's so exciting, I think, many times for people to understand that this is not just an opportunity to, yes, absolutely put some money into a project where you get to see fabulous returns downstream, and also that the upside doesn't really have that inverted effect of the cap gains tax. You get all these other benefits and early deferral, et cetera, et cetera. But then beyond that, to know that there's a heart behind the program, and that that, you're doing something that's meaningful. It really ties it all together and I think puts a bow on it. So any parting shots? I know we've covered a lot today. I have put a link here in the chat for everybody. But beyond that, of course, I'd love for people to reach out directly. But did you have any final thoughts that either of you wanted to share before we say adieu to everybody who joined us today?
Jeff, let me just add one thing. As you mentioned about the returns, the advantages of the OZ program. The main advantage is when we sell at the end of 10 years, there's no tax on the gain. And so the internal rate of return that I provided is a pre-tax internal rate of return. And on this deal, if it's sold with a good deal of profit, that will be the after-tax return as well. Now, we're not tax advisors and it's complicated, but the bottom line is the pre-tax return is likely to be the same as the after-tax return.
Absolutely. That's exciting. Jeff, anything else?
Yeah, I think it's just been a pleasure. Thank you for having us, and we'll be
100%.
happy to speak with anyone that wants to reach out, and look forward to hearing from everyone.
Terrific. Well, again, we've put the link here in the chat. And if you would like to reach out, simply go to that page, scroll to the bottom, click contact the developer, and you'll be in touch immediately. And it sounds like you guys are ready to go. So hopefully somebody who joined us today is also ready to go and would like to get involved in the greater Boston metro area out there in Brockton. So Ted, Jeff, thank you both so much. And everyone, thanks for joining us here with OZ Listings. Have a wonderful day. Bye, everyone.